the best of the week on Relevant Radio.
I came across, really, I think something that can benefit you, that can give you some perspective on your wealth and ways that you can really leave a legacy. I know you've seen the headlines like me. I was looking at the Wall Street in general. I was looking at the different stocks. Wall Street has just hit all-time highs. You know, you turn on your news at night and you're thinking, the NASDAQ, the S&P 500, record closes, Dow closing at record levels. If you watch some of the big movers, some major stocks that are out there, you have those magnificent seven, but NVIDIA briefly hit $4 trillion market cap. Whoever thought a $1 trillion company, let alone $4 trillion? I mean, in terms of market, that's kind of a surge. You might have bought it. I know several people who did buy NVIDIA. That appreciated stock creates the opportunity for people to give strategically and prayerfully and create a legacy that may endure beyond your lifetime. So if God has blessed you, think about how you can use it. If you have held shares of stocks that have climbed over time, this is also a powerful opportunity. You can transfer that stock, not the cash, to a charitable vehicle. And that means you can skip capital gains, you can get deductions, and most importantly, you can make your gift go a lot further. So I've invited an expert. Joe Chickey joins me today. He is an incredible certified planner. He's a financial planner who specializes in effective tax strategies for giving, and he's going to help walk us through all of this right now. And I thought, we kind of do a little 101 in terms of financial literacy today, explain the different financial instruments, take advantage of how they might benefit you. And you hear terms like appreciated stock gifts or charitable remainder trust or required IRA distributions or donor advised funds. It's over the heads of a lot of people. So, Joe, it's good to have you in here with us today. Maybe you can help unpack all this for us.
Fantastic, Drew. Great to be here. So I've been blessed to spend really 4 decades working with people who have been successful, who want to give back to this great country of ours. It's surprising to me how successful business owners and people who've had a lot of wealth sometimes don't understand there's some smart ways to give. And you've already touched on one of those. As opposed to giving cash, you can actually give appreciated securities. It doesn't have to be individual stocks. It can be mutual funds. And I'll share a quick story. I met with a woman a few months ago in her early 80s, and she was giving, $20,000, $30,000, $40,000 a year to this charity every year in cash. And I said, surely you have something that's appreciated that you could get more of a tax benefit. And she said, Joe, I have this stock. It was a Fortune 500 company. That's where her husband worked. And she said, I just can't give that away. It's too meaningful to me. Oh, wow. And I said, well, I understand that. But I said, let me explain this to you. I said, you don't have to give it away. As opposed to your $30,000 in cash, you could actually give $30,000 worth of that stock today to a charity, and we'll help you do this. It's a simple transaction. And then you can turn around and take that $30,000 and buy the stock back in the same day, wow. Right?
You'll have to explain that one.
So it's simple. It's a simple transaction. So what a lot of people think is that you can't buy and sell stuff in the same day, right? As long as you've got the money, you can do that. And she's not selling the stock. She's gifting it to a qualified charity. So she gets this wonderful tax deduction. And here's the other genius to that. So this stock, her husband passed away 10 years ago. There's been a significant appreciation in that window of time. So now she doesn't have to pay the capital gains tax on any of that, wow. Right? And she still has all the stock. She didn't lose any of it. So I think sometimes we talk to these people who want to have an impact, but they don't understand what those possibilities are. Now, the other big story I'll share relates to the what's called a qualified charitable distribution. So when you turn 70 and a half, if you have a traditional IRA, you can give money from your IRA to a qualified charity, and now up to $108,000 a year. You don't get a charitable income tax deduction, but you actually don't have to pay taxes on that when you pull it out of your IRA. Remember, this IRA is something you've put money into year after year after year, maybe through a 401k that you rolled into an IRA, right? Yeah. But you've got all this money, and the IRS says, hey, we want our money. So there's this required minimum distribution where you have to start taking money out of it, and then you pay taxes on it, right? So here's this window of opportunity. 70 and a half, there are all these people in their 70s and 80s now, right? I've read recently this is considered peak 65. So there are more people turning 65 right now than ever in the history of our country. All these baby boomers that are aging, right? So much wealth, so much opportunity. So I share a quick story about my father, who's now in his early 90s. A couple of years ago, when this law changed and you could give money out of your IRA, I'm having lunch with my dad. And I said, Dad, you and Mom could make all your charitable gifts to the church. all these wonderful charities you support out of your IRA, and you wouldn't have to pay income taxes on them. He says, you gave me one of those looks, right? So it was a good year later, having lunch with my dad. And he said, I was talking to one of my buddies at church, talking to one of my golfing buddies. Did you know that your mother and I could make all of our charitable gifts out of our IRA and we wouldn't have to pay taxes on them? I was saying, Dad, what an incredible idea. You should do that.
That's hilarious.
And the message is not that I don't have a great relationship with my dad, but change as we get older, right, Drew? Change as we get older gets harder and harder. So he was not comfortable doing something different until he knew he was very comfortable himself, right? Yeah. Now, the great thing about these QCD gifts is it's current money for the charities. It's a wonderful way for them. And once these older donors do it one time, they do it again year after year after year. And it's so beneficial. And it's the other reality to this, as you know, is the IRS, if you leave money from your IRA to your children, right, they have to pay the income taxes on it. It's this crazy thing is that the way the IRS has set this up. And the other change that happened a couple of years ago is if you leave money to your kids from your IRA, they have to take all the money out in 10 years.
Oh, wow.
So it's a perfect gift to give to a charity. So there's a lot of those great stories. There's so many wonderful people out there, and any opportunity I can have to educate people is a joy for me.
Explain, if you could, go back to the required IRA distribution. That 70 and a half, you said, I think was the age.
So, yeah, here's what gets confusing, Drew. So at 70 and a half now, you can give money to a charity. That's called a qualified charitable distribution. When you turn 73, then you have the RMD, the required minimum distribution. You have to start taking money out. And that age will actually grow to 75.
And that's over a 10-year period, or is that extended?
So now, yeah, if it's just your account,
right,
then you have to take money out every year, and there's a calculation you run, whatever that minimum distribution is. Oh, this is a funny story. My father had to start taking that out when he was 70 and a half.
Yeah.
Now he's in his 90s. He still has money.
Wow.
Which is so funny. Now he's a little more aggressive. He's been in that 60 to 65% equity range.
Oh, wow.
But it just tells you how well the markets have done.
Oh, crazy.
Over the years, right?
So there's a lot of people right now holding a lot of appreciated stock. 401ks are fat right now. People are doing pretty well who put it away. What's the next step? How do you advise us? So somebody's looking, they want to go ahead and maybe let's stay on the IRA distribution age and donating to a charity of some sort with some of this money. What's the next step? How do they do that? How does it benefit them?
So, yeah, simply stated, once they turn 70 and a half, and it has to be a traditional IRA. So if they have a 401k, they can roll their 401k into an IRA, which is a simple transaction. And then they qualify to actually give that money to charity.
That works for 403Bs and other ones too?
Yep. So any retirement plan, 403B, 401k,
That's really interesting. So what about the stock? What about the appreciated stock for people? Again, I'm not quite clear on what you said. You said this woman could donate the very day and then turn around and buy the stock again. How does that work, and how does it benefit her? Both the giver and the receiver.
So the transaction is she just notifies her broker that I want to send X number of shares to this charity. So the transaction can happen that day. Right. And then because she now has this cash that she was going to give to the charity, she can take that cash and go buy the number of shares back that she just gave away.
That's crazy.
Right?
It doesn't seem legit.
Well, and the reason it sounds odd is because you're not buying and selling that much stuff typically in this whole, but because she's gifting it, right? They're different rules.
That's really wild. And she gets to take that off of her, income tax. And
then she would get a charitable income tax deduction, assuming that she itemizes her tax return. And that's one of the big changes. We've had this new tax law that we're referring to as OBA, that just passed. We did get what's called an above-the-line deduction now, beginning in 2026, January 1 of 2026. You can now give away $1,000 to charity, and you get an income tax deduction if you're an individual, and if you file jointly, up to $2,000.
How did you feel about that when they did away with the charitable deduction? Did donations go down for organizations and charities?
Yes, absolutely. The big change, the 2017 tax law change under the first rule and under Trump's first term, basically. Really, the biggest change was he changed the standard deduction and made it much larger. Right. So what happened is a lot of these people, it didn't benefit them to itemize. So prior to 2017, about a third of our country would itemize their tax returns, and we're now in the 10 to 12% range. So it's much smaller. So that's why this non-itemizer thing now will be really good in 2026. Some of these smaller donations, in the $1,000 to $2,000 range can happen more frequently.
It may motivate some people still to give, So I think it's a good idea. I think it's a great motivator for people. They know they can write it off in some respect. But most people don't know. They don't think about appreciated stocks or charitable remainder trust or a lot of the things that you are now educating people on. Where can they learn more about this? Because look, Relevant, of course, is a charity. I always advocate for them.
Right.
There's a lot of people who support wonderful pro-life organizations that are out there. I always tell people, make sure you give to your church, right? So there's lots of different charities that you can get behind. And there's others too. I've got a friend whose daughter has juvenile diabetes. We go to their event, always support those causes. So where can you learn more and what's the next step for people?
So great question. I would say working with their personal financial advisor is the first step. Yeah. If they're charitable, I would go to the people they trust first. There are plenty of resources out there in the fundraising world for people that are fundraisers, the American Council on Fundraising. There's a National Association of Charitable Gift Planners, which is a little more focused in that legacy space, which I've been involved with for many years, which is a great resource for some of these more complex gifts. I think I just tell people, ask questions and see what you can learn. There are plenty of financial institutions that have more detailed information about charitable giving in the different ways. But there's just so many win-win options now. Yeah. And there are a lot of really smart people out there I've been fortunate to work with and learn from. But, think about, most importantly, the church you want to support and the charities you want to, I had a fundraiser. I was doing some teaching recently, and she said, I talk to donors and I say, what is your aspirational goal in life for your charity and your legacy? What is that for you? I mean, we talk a lot to people, and this is from the fundraiser view. We ask people for money on a regular basis, annual giving, and maybe special opportunities type. Right. But we don't talk as much about legacy. So I spend a lot of time talking with people saying, what do you want your legacy to be? Do you want to help this to be a better country? Are you in a position to do that now? You can do some of that now. And maybe it's money today. Maybe it's just a simple bequest in your will to help those causes.
It's such a good point. I hope people will think about that. You were mentioning to me that in the country alone, only a third of Americans have a will. And that was stunning to me. That's it. 1 out of 3 people have wills.
Yeah, you're exactly right, Drew. So there's only a 35% of our population has valid wills. And it's fascinating to me, too, that 80% of Americans give to charity during their lifetime, and less than a third of them when they pass away. So there's a tremendous opportunity there, I think, for us to encourage and engage more people to think about what an impact they can have. What are their passions and how can they really help those organizations? The other unique piece in our country is there's so much wealth. We talk about real estate. We talk about the securities. There's also significant wealth in closely held businesses. So not those publicly traded, not the Fortune 500s. And a lot of these businesses, these people are in their 60s now. We've got this big group of boomers that are retiring. And the kids aren't really interested. Some of these are, car dealerships and somebody's, a bunch of car washes or restaurant businesses. And the kids are like, I don't want to do this. So what are they going to do with it, right? So they can give some of these assets away. There's some really unique opportunities there and a real window.
I know a man who sold his business. It's worth a lot of money now. And I don't think the kids took over. I think he sold it, actually gave it to a young kid that first started working with him or something like that, because I don't think the kids wanted it. He's got all that money now, and he's just, and I'm thinking, well, what do you do with something like that? And he's charitable too. I know he gives to a lot of charities. I'll have to run this by him as well. Is there a website? Is there some sort of resource? People saying, I need to know a little bit more. Where can they turn?
I think you start with your own advisor because every situation is a little different. Unfortunately, our tax world is a little complex. But having said that, I think there's some simple messages, as we've talked about, with appreciated assets and other things. And just be mindful and ask the questions.
What about a retiree who's on a fixed income and who wants to be charitable too, right? How do you balance a need for income with generosity?
Oh, that's a great question, Drew. And everybody has to decide what they're comfortable doing. It's interesting. I had several widows that I worked with over the years who were trying to write me big checks, and I knew they couldn't do it. I'd always take her checks back, and we never cashed them because you didn't want to make her
Really?
feel bad. But having said that, as we've talked about, giving money, if you're over 70 and a half and you are going to support a charity, even if it's just a few $100s, you could give that from your IRA. That'd still be the best way for you to make the gift.
That's great.
Because then you don't have to worry about itemizing your tax return because you're not going to pay taxes on that otherwise that you would.
Relevant Radio, seeing that only 1 out of 3 people in the country, only 33% have wills, created a wonderful program called Catholic Legacy that helps you for free put together a will and plan your funeral and do a litany of other things. It's a wonderful resource. I've been on it. Know a lot of my colleagues has as well. CatholicLegacy.com, relevantradio.com/cars. Anybody who's got assets, businesses, or other wealth that they intend to maybe use for charitable purposes.
Yeah, I would encourage you, if you have anything that's appreciated in value over the years, whether it's artwork or personal property, it can be anything. You can benefit by giving that to a charity. I would certainly look to explore that and talk to your advisors.
Well, I'd love to have you back. I think it's fascinating. You've got some great stories to share. And I'm grateful to have you in here today.
Oh, my pleasure, Drew.
Thanks
Glad
for
to be
being
here.
All right. Hey, this episode of the Drew Mariani Show is on the Relevant Radio app. The Relevant Radio app is completely free. It's updated daily with fresh articles, podcasts, and prayers. So don't delay. Download the app today. Thanks for listening.